Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today we again will take a look at the euro currency, mostly because we are currently monitoring two major currencies, the Great British Pound and the euro currency. On the Great British Pound, the analysis that we have prepared a couple of sessions ago, as we have said about the possible upward retracement. This retracement still stands on the way, and market is forming the hand shoulders pattern that we have discussed, but it has been complete totally. So currently, in fact, the situation on the Great British Pound doesn't need any update from us. So let's just see and watch how this retracement up will be completed, because we mostly are interested with the completion of this retracement, since it could give us the short-term setup as an ABCD pattern, as we have discussed. The ABCDs that's based on the Brexit candles, based on Brexit drop. So this is the major setup that we're watching for on the British Pound. It's possibly, guys, on the Japanese yen we could get really something interesting, because as you can see, yen has dropped really miserably recently due to the expectation of the more stimulus from the Bank of Japan to the economy. So it's really could bring some new patrons could be formed or something of that sort. So the situation there could be interesting very soon, but not yet, because this drop has happened just yesterday. Well, that's why today we're take a look at the euro currency again and see what changes have come. So what we could do today and what to watch for today's session and maybe tomorrow. So guys, first of all, on the daily chart, as you can see, nothing really drastic has happened. So both of our patterns that has been formed, I mean these grabbers, are still valid and still point on the possible taking out of the 109 lows. So from that standpoint, nothing has changed significantly. Market still stands below the monthly pivot point. The only thing that has happened is just the trend has shifted bullish. But as you can see, action to the upside is not really significant. So don't see any thrusting action by far. That's why I think that our setup here is still valid, and we should be watching for possible drop lower here. On the 4-hour time frame chart, the butterfly pattern becomes even more clear. It has changed the shape a bit. So yesterday we had the top of the the right wing here. Since market has moved slightly to the sideways, here we get the different shape of the butterfly, but the core, the targets, stay the same. Since this swing has been cancelled, market hasn't shown any breakout to the upside here, so that's why the swing is still valid, and butterfly is also will be valid. This target stands at 108.50 approximately, maybe slightly lower, but this particular the pattern that could lead market to taking out of these lows and complete the target. Interesting situation on the hourly chart, guys. On the hourly chart, yesterday our conclusion was is based on this hand shoulders pattern, so it's a bit, as you can see, overloaded picture, the details. So, but it's just, let's take a look at it. So this is our hand shoulders patterns: left shoulder and head, right shoulder. Yesterday we discussed market in this moment. Market stands on the bottom of the right shoulder, and we said this market stands at important moment, and keep an eye on this pattern and use it. You could use it as an indicator. So if market will and hold here and will drop lower, this will be the clear sign that these grabbers are starting to work, and market should accelerate lower. If market will hold here and will continue to move higher, in this case, don't be bearish. Do not open the new short position. So if you have the shorts, for example, that you have taken here, as we have discussed, you could keep it. But if market is forming the hand shoulders, don't take the short position. What we have right now, take a look. Market has reached the neckline. Neckline stands in the 618 resistance of this most recent swing down, and this is simultaneously the approximately the 50% resistance on the 4-hour time frame chart. So this one level, it's major level, as you can see. That's slightly lower. So, and in general, guys, take a look at the action that we have here. It's a bit heavy. So we do not see real control from the bulls over the market. So it's the same choppiness action as we have here, here, and here, and everywhere. And while the this pattern is forming. Also, take a look at the market has made some attempt to pass through this neckline, pass through this resistance, but has failed. And this already has happened many times. So this was first test on the payrolls release, second, so it will be third, fourth test, and every time market fails to do this. Right now, market has formed multiple bearish grabbers, minor grabbers, this one and that one, that suggests moving slightly lower. That's why, guys, I think that currently it's not really big chances that market will break through this area and will continue to move high. Currently, personally, I don't want to buy EUR in the current situation. So if you have bought it here, based on this hand shoulder as well, this is, we could understand here the buying here, because so you could place really tight stop here and just get the fast clarity whether your bet will work or you will lose money. But in this case, loss will be very small. But here, right at the neckline, it's not really comfortable to take any long position, especially taking into consideration this action right near the neckline. It's not really typical for the hand shoulder pattern. That's why, guys, here you could have a couple of possibilities to trade the situation. First one, you could try to take short here, but in this case, as usual, you will take more risk, although you will get the better entry point. More risk is because here we still do not know whether the market will break this area or not. Although we think that it hardly will happen, but we can't guarantee that. That's why if you take position here, you get better entry point, since your level will be higher where you take position. But you have the more risk that market could, for example, break it or show another spike here, that will touch your stop or something of that sort. So this is more aggressive entry technique. Or you could wait, if market really will start to fail with this head and shoulders pattern move down, you could wait when the taking out of these lows. As soon as market will erase the right shoulder, this will be almost 100% probability that overall hand shoulders will fail, and that in turn will mean that market really has started to move down with this butterfly pattern and so on, right to the target. So that's why you could just make the decision here. You will get worse entry point, but you will get more confidence, because the downward action already will start. The market will erase this head and shoulders pattern. That's why you could think about these two ways. You could combine both of these ways. For example, you could take small position here, and if market will drop here, you could add more. So consider a lot of different ways exist how you could do this. So that's why let's keep watching. Let's see what will happen with this pattern. But overall situation, guys, on the 4-hour time frame chart, on the daily chart, looks mostly bearish until these grabbers are valid and until market will not start to move up and return back above this trend line. So while market stands here, this downward action really has more chances to happen.